having a strategy and plan when you're investing in any assets is very, very important. Cryptocurrency is no different. In this video, I'm going to break down exactly what strategy I'm using to 10x my gains this year, but also how you can figure out what your strategy should look like depending on what type of investor you are. If you're interested, keep watching. Hey guys, my name's Ravi Sharma and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button. Definitely leave me a thumbs up so we can spread this video out to more people on YouTube. Now, if you are interested in more content like cryptocurrency, real estate, and financial freedom, you should definitely go check out my Facebook group, which I've got a link in the description below. It's a private Facebook group where we talk about real estate, passive income, and we're really building a good community out there. So definitely go check that out. In this video, I want to break down the perfect cryptocurrency strategy and how you can position yourself for success and maximize your return on investment when you're looking at an asset class like crypto. Now, I've got multiple videos on this channel where you can see what I'm doing and how I've built my portfolio, but I've never actually gone into the specific strategy I use. Now, it's very important, and I talk about this with real estate investing, and I also talk about with crypto, is that if you don't have a plan, you're simply going to jump in to whatever the next media hype is around the next project or the next coin, and that's essentially how a lot of people fail. Now with crypto, it's one of those places where it's unregulated. So you see a lot of scams that come up, but that's why it's so important to have a plan, have a strategy, and when things get a bit euphoric or they get a bit depressing, you have a plan that you can always go back to and it keeps you sane. With the volatility that comes around with cryptocurrency, it's natural because we're early adopters. The actual technology around blockchain is very, very new when it comes to widespread adoption. And with that comes volatility. But there's huge opportunity in this space, and that's why a lot of people are making a lot of money. But it's also interesting to see how, at a macro level, how much this will change the entire world and traditional finance world and landscape in the future. Now let's jump into the two types of investors there are and what type you may fall into, what sort of strategy might be best for you. If you are new to investing in cryptocurrency, the best way to start would be with CoinSpot, the most trusted exchange in Australia. So there's a link in the description below. If you simply click that, uses my referral code, which allows you to get $10 free Bitcoin. So it's the easiest way to start and it's the most trusted. So I'm not sure why you wouldn't. So if you are someone that not really interested in looking at these markets and keeping up with the news on the daily, following YouTubers, influencers, and really trying to understand the space, then you might be what's classified as a passive investor. You might be going,
well, look, Ravi, I believe in this technology, but I just simply don't have enough time to actually go in, research day in, day out, what new projects are coming out and what's happening to the market and why prices are going up or down.
So you just might be a passive investor. Now, there's nothing wrong with that. In fact, I think when it comes to something like crypto, passive investing is almost better than active investing because people do get super emotional about something that's so liquid. Now with real estate, you can't go and simply go to the bank and say,
oh, like what's my property value today for?
And then go back 12 hours later and say,
hey, what's it valued now at 1 a.m. in the morning?
With Bitcoin, with cryptocurrency as a whole, you have 24 hours, 7 days a week of trading, which means it can affect you emotionally, especially with so much volatility. And I'm talking about both pros and cons, which means your portfolio could absolutely take off today and, be up by 10, 15, 20, 30%. And you could be really happy whatever you're doing, but equally, you could go out to the cinemas and just be watching a casual movie where you take out your phone and you suddenly realize, hey, I've just lost on paper about 10% of my portfolio. Now you've been put into a negative headspace and it's not the ideal way to deal with this. So if you are someone that one, doesn't have the time, two, isn't really passionate about this space, but still wants the returns of what cryptocurrency and digital assets can bring you, and you're also very emotional when it comes to this sort of thing, then I would say you need to stick to passive investing. Now, what's the best sort of strategy with being in this place? Well, it's pretty simple. It's called HODLing, right? So HODL. It's like hold, but HODLing is a cryptocurrency term. And basically, it's hold on for dear life. It sounds pretty dramatic, but essentially what you're doing here is this is my strategy, this is my plan, and this is my goal. Which means if I'm planning to hold for the next 5, 10, 15 years, I don't really care what happens in the next 2 to 3 hours. In fact, if you're looking at this with a long-term vision, and I definitely urge you to look at it that way, you are positioning yourself for long-term success. People that come into this industry with cryptocurrency and thinking, hey, you know what, I can just buy this coin tomorrow, I'll buy that and then sell that and buy this. If you do not know what you're doing, you will get wrecked. And this is how a lot of people have been losing money. This is why you hear so many people complain on Facebook groups and say, oh my God, I lost money on some coin that came out. That's what we're trying to avoid. We're trying to approach this in the most methodical way with a clear purpose so that you can maximize your returns. That's exactly what I've been doing for the last couple of years, and I've done substantially well in cryptocurrency. And it's because the principle applies the same when you're looking at different asset classes. If you are interested in knowing what my cryptocurrency portfolio looks like, you should definitely go check out this video, but there's also a link in the description to a playlist of cryptocurrency videos I've made on this channel. So with nothing being financial advice, I want you to really assess which type of investor you are. If you are a passive investor, for me, if I was passive, I would be looking at dollar cost averaging into the main projects. Now, if you aren't interested in knowing what little projects are coming out and what are they doing in use case, I would stick to my top 2 projects, which is Bitcoin and Ethereum. Now, there's huge speculation around other coins and low market gems and things like that, which could potentially go 10x, 20x and whatnot. But if you're looking at this long term, you've got to look at what is the most secure, and of course cryptocurrency, because it is so volatile, it's like any other asset. There's always risk involved. But what's important is if you want to minimize your risk, well then stick with the big guns. You've got Ethereum and you've got Bitcoin. You sit there, dollar cost average, every month or every couple of weeks, you're going in and you've purchased just a reoccurring buy, and it continues to purchase, and you continue building out that portfolio. That would be the best way to approach it. It means that you have no hands-on sort of approach with it. You aren't interested in the day-to-day, and I think that's the best way if you are a passive investor. Now, if you are interested in knowing what the best beginner crypto portfolio looks like, then definitely leave me a comment down below. I'll definitely make that video for you because I am very passionate about this space. But what I'm more passionate about is helping people like yourself and a community, and to be able to grow that community with like-minded people, and that can actually go out there and, you know, take action for themselves and take accountability to become financially free. So if you're not a passive investor, and that doesn't sound like you might be what is called an active investor. Now, this type of investor is someone who is interested about the space, has a bit more spare time, and makes time to actually research these things, but also is someone that's passionate about knowing about the smaller projects, about new projects and what they're actually doing, and going a bit deeper into your research. Now, if you are this type of person, you might be then interested in going, hey, I want to learn about technical analysis. I want to learn about how charts work. I want to learn about the fundamentals of each project, and I want to time the market. Now, of course, here, I don't claim to be a trader either. I do spend a lot of time researching about what projects are coming up and what are they doing in those projects and those companies themselves. But I do not sit there and look at charts all day and go,
okay, I can predict what's going to happen, because no one can.
Right, cryptocurrency, because it's so much in its infancy, you have high probability of certain things happening, and then you have a level of confluence to suggest that this might be the next move, but no one can predict it, right? So if you are someone that wants to learn those sort of things, then you should definitely go down that path. But if you are someone that's a bit more like me, where I'm active, where I spend some time researching, but I also keep up to date with news and new projects and market news and news around the grounds, then I would suggest going down this path. Here is where you could basically go, these are the projects that I definitely know can work and have been around for a long term. So, let's say Bitcoin and Ethereum. So a large portion of your portfolio could be made up of those coins. Then what you could do is you could start cherry picking a few different projects that you really feel connected with. Now, again, do not get emotional about any purchase you make, whether it's cryptocurrencies or real estate. It's all about looking at the finances, it's looking at the use case, but it's also looking at fundamentally, is it overvalued? How many tokens are in supply? How much is available in the entire market? And what does that look like in the long term? Is it a project that's really just looking for a quick win? Or is it someone that's actually building fundamentals things around decentralized finance or NFT space and smart contracts? It really comes down to a bit more research that goes beyond just simply going, oh, these are what the news headlines look like, I'm gonna go and buy these coins. Essentially, the way that you would go about buying in this case would be, yes, dollar cost averaging is always, a great and safe option. But what you could do is, if you are interested interested in sort of keeping up with market trends and looking at daily, charts and what's happening with prices, then you could effectively go in and buy the dips. Now, you must have heard this across other crypto videos and influencers, and they say always buy the dips. Basically, there's a time and place for it. When you're in a bull market, most likely the dips are a great buying opportunity. I call it a blessing. But if you're in a bear market, it's a different case because it's like almost like a falling knife. How far can it go? So if you are looking at buying just the dips, you could substantially increase your return on investment in the long term. Again, it's like timing the market. So unless you have significant amounts of research, you're interested and you're keeping up to date with what projects are doing what, then you will do really well in this space. Now, before I go onto what I'm personally doing to get my 10x gains this year, definitely subscribe to the channel if you're interested in cryptocurrency, real estate, and financial freedom here in Australia. And also, if you are ready to get started with cryptocurrency, you should definitely use the link in the description below. You'll get $10 free Bitcoin when you sign up. So what I'm doing to get my 10x gains, I pretty much have two different portfolios within the portfolio. And what I mean by that is you've got your long-term holds, which are your major cryptocurrency projects. And that would be like, say, your Ethereums, your Binance, your Cardanos. And then you have what I call a trading coins, right? Very similar to, I guess, property, where I talk about having your foundation. These are the properties that are like a set and forget, based on history, based on the incoming supply, based on what those projects or those properties are doing and the local economy, you know that these properties will do really well for you long term. They're your set and forgets. They continue ticking over in the background. Now, when it comes to the other side, what I call trading properties, that could be developing properties, that could be buy and sell, off the plan, build units, develop, whatever that case is. You could also apply the same to cryptocurrency. So this is something that I've been doing, which is where I have my main HODL bag, and that's the one that, I just keep trying to buy the dips and keep growing that portfolio. While meanwhile, I'm on this side, I'm looking at different projects, I'm looking at what I like, what I don't like, based on, the fundamentals. And I also look at how do I go into a project that really hasn't done its big run up, big parabolic move where there's so much price action and it's up 2, 3, 400% in a week. What I'm looking at is going, if I do have a coin that does go on this massive run by 200, 300% in a short term, what I would do is I then take out a portion of that portfolio, so I sell that, and then I take that into a different project that, sort of been sitting there dormant. Because essentially, if you're buying when things are green and they're at the top, your risk is at its highest point. For the return, which isn't that great. It looks great on a graph, but it's actually not that great. So what I would do is when I have coins in my portfolio that take off and they suddenly do 200, 300%, I will then sell off a portion of that, go into a different coin and start building up my positions like that. It reduces my risk significantly, but it means that I'm always taking profits off the table. That might mean it goes into another project, or it might be that I'm selling back into AUD, waiting for the next dip to occur. This is a rinse and repeat process. If you are looking at sort of being a more active investor, I think that is the best way to approach it. Again, this is how I'm doing it to get my 10x this year. I'll leave you with this, guys. The most important part to this is that you're still very early. You're in a space that I essentially think is going to replace traditional finance as a whole. The way that we operate on the internet now is going to be completely changed. The way we operate in general is going to change completely with what is going to come out in the next 10 to 15 years. So if you are looking to get involved, the best way to start, get on CoinSpot, get your $10 free Bitcoin and start researching. Nothing I talk about is financial advice. It's all for education purposes. What you want to start doing is use these videos to either share with a friend or with your sibling or with your partner that's been a bit skeptical about this whole space, and start understanding that cryptocurrency, Bitcoin and Ethereum aren't going anywhere. This is just a fact of life where early adopters get in, they take the most risk because it's speculation and there's volatility. But as we go through this, we're going to realize that this is going to become mainstream. It's going to become accepted widespread, and we're going to see more and more use case in our everyday life. Now, when you get in at that point, you'll still make significant money. However, it's the early adopters that really benefit from what is happening in this space. So get a goal, get your strategy in play, and have a plan for what you're going to do and get researching. If you're a passive investor, go in, dollar cost average, don't look at prices daily. If you're an active investor, do the research, spend time learning about these things, and of course, subscribe to channels like mine, and you'll definitely keep up to date with not only my cryptocurrency portfolio, because I do that monthly, but also some of the projects that I'm looking at, and I share that occasionally with you guys to know that these are the projects I'm probably going to buy, but it's always a prompt to do your own research. Guys, thank you so much for watching another episode. I'll catch you guys in the next one. Thanks, guys.